All right, a very wonderful morning to everyone. Welcome once again to Morning Market Review. My name is Victor, and you're going to be with me here for a while. I'm going to be taking you on the review this morning. So, um, why don't we just, okay. All right, so I would quickly like, as much as I would want us to wait for others to join, but I don't think we need to really wait as much because you'll be surprised how much time flies. So let's just, you know, um, get on with the review. So I'd like us to first of all look at the Forex Factory or investing.com. Majorly, there are two major aspects of trading, or two major points where we get informed information or information to take an informed decision in order to buy and sell. Trading involves buying and selling, right? So for you to buy or for you to sell, there obviously must be some level of confidence to the decision you are taking. All right, you buy if you know price will rise, and you sell if you know price will fall or crash. So how do you know price will go up? How do you know it will come down? It's not just random movement. So there are some precursors or pre-indicators that tells us the possible direction where price should go. So our job is to find that out. Hence, the market review analysis. All right. So that's what we are here to do. Now, I'm going to be doing this in three ways. The first way, we'll check the fundamentals, the major news that can affect the market today. That's one. Secondly, we'll do two things on the chart, technical analysis. We'll analyze and we'll do a little bit of psychology, right? So those are the three things that we're going to be doing today. So let's quickly get into the fundamental aspect. I am muting everyone. Please, once you are here, just make sure you are mute. And if by any chance you find yourself on mute, please mute yourself again. All right. Thank you for your understanding. All right. So if you can see my screen, can you please type yes on the chat box? I'm on Forex Factory. I'm on Forex Factory. If you can see my screen, please type yes on the chat box. And if you cannot, just good morning, Ile Labui. Okay, thank you so much. Thank you. All right, so let's move on. Now, this is Forex Factory. We also have investing.com, places where we can sort out for other currencies, commodities, indices, even stocks, the recent fundamentals or news driving them. But Forex Factory gives us like a quick summary of what to expect for the day. Is my chart you are seeing? I'm currently on Forex Factory again. Okay, you can only see the chart. Okay, let me do this again. Let me share it again. Okay, so we should be on my Forex Factory again. Oh, okay, Forex Factory is in now. All right, thank you so much. Thank you. Okay, so as I was saying, for every singular trading day, the market is active. And once the market is active, obviously, there are certain underlying factors that drive the market. Price doesn't just go up because it wants to go. Price doesn't just go down. It's not random movements, or they don't just make random movements. They moved based on certain things. It's either they are moving towards a particular point or they are moving away from something. technically speaking. So our job is to find out what exactly is moving price. Now, if you cannot find out exactly what is moving price just be moving steadily, then we can do a fundamental or technical analysis. Now, fundamentals involve checking for possible news. Now, some of you already know how to use Forex Factory, some of you don't. But a brief summary of Forex Factory is what you are seeing here. First of all, this is Thursday, 20th July, and these are different times. For instance, by 8:30 a.m. today, Thursday, 20th July, for the Swiss franc, that's CHF, we are going to be having a news, which is the Swiss National Bank Monetary Policy Assessment. For those of you who are familiar with FOMC, right, Federal Market Committee, like for the US dollar. Now, these are the guys in charge of setting the interest rates. The interest rates, that's the policy rates. Then they are also going to make a press release. So there's a committee, just like the federal, what do they call it now? The Central Bank of Nigeria, having a committee in the central bank that determines the interest rate. That is the amount of money that the central bank lends to commercial banks. Okay, sorry, the interest accrued overnight for the amount of money the commercial banks lend to the central bank lend to commercial banks. And now this is also going to determine the amount commercial banks are also going to lend to individuals, right? So it's like a cause and effect thing, one thing leads to another. Now, this affects the strength of the currency. There's a short run effect, there's a long run effect, all right? So we might not have enough time to talk about all of those things now, but just note that whatever carries a red envelope here, it shows the impact is high. Yellow envelope, the impact is low. And the brown envelope, the impact is medium, right? That means it might affect it, but just a little bit. This one, just very little. If it affects little, the brown, it affects to an extent, but the red, it can affect the market massively. So these are the ones we are looking out for. So for today, we are looking out for Swiss franc, CHF, also GBP by 12 p.m. also. The same monetary policy summary. You know, all of these countries, once they are releasing their monetary policies almost at this period. And then for the USD, 1:30 p.m., we are going to be having an unemployment claim. That is the number of persons that filed for unemployment for this particular, for the previous week. So we want to know how many persons lost their job. So these are one of the ways that they measure if the economy is doing well or not. So if more persons are losing their jobs, that means more people file for unemployment claim is bad for the economy. People are losing jobs. And why are they losing jobs? The economy is shrinking. It's not expanding, it's shrinking, which is bad. But if less people are losing jobs, it shows that more people are getting employed. And for them to get employed means the economy is expanding, right? Which is good. So if the figure, which is 242 previous, now they're expecting 235. If we have a figure above 235, it is bad. But if we have a figure below 235K, that's 1,000, then it is good. Less persons lost their job. Now, for those who don't even know if it's good or bad, just follow the colors. Whenever the news comes out, if it comes out in green color, it means it is good. But if it comes out in red, it means it's bad, right? Then if it comes out in black, it means that it is the same. Or there's practically, like for instance, the forecast is 3.45%, and when the news came out at 3.45% or very close. So it shows that there's no difference. Just my advice is stay out of the market in cases like that. So if it comes out in green, by implication, the USD is going to be strong. If it comes out in green. But if it comes out in red, the figure comes out in red, by implication, the US dollar is going to be weak. Okay. So if it is green, good, you want to buy the dollar. If it is weak, you want to sell the dollar. Sunday only, yes, they are going to move markets. Yeah, obviously, they are going to move markets. So it will be in our best interest for us to know them and for us to know the exact time they're going to be out. Okay. So these are the things that help. So now let's move over to charts where we're going to. So I want to ask a few questions. Now I'm on my charts. I just want to confirm also if you can see my charts. My charts, I'm on Euro USD. If you can see my chart, please signify a yes. If you can see my chart, please signify a yes. Okay, thank you so much. Thank you. Thank you so much. All right. Now, have you ever been on a trade? You were on a trade, and possibly it was going your way, or at least you are not in negative. You were not in negative. Maybe just small profits, very little profits. And sometimes it's just go back in negative or small negative, go back in profit, and you're waiting, okay, for it to really go your way. All of a sudden, it just went against you. Within a twinkle of an eye, you were in huge negative, like especially when you don't have stop loss. Because I know most of you here do not use your stop losses. Have you ever been in such situation before? You're on a trade. It was looking like it was going your way, but you were not yet in good profit, small profit. All of a sudden, the market just turned and went against you, like with speed, massively. If you have been in such situation, just signify. Please just signify. All right. Because I need to work on your psychology. I need to let you understand certain things that you do wrong. All right. Okay. Obeying. Well, uh, I don't want to call you mama because I know you are not alone. Obeying. Well, I'm sure you've been in that situation before. Now, a whole lot of us, we've been there before. Oh, Wasiu, Sobande, many times. Gbenga, your own is all the time. Okay, let's correct that now. Regularly. So is it safe to say that the market is watching you? Or sometimes you've gotten to that point where you assume the market is watching your move. Like if you place a buy, the market goes against you massively. Okay. Now, I know there are a lot of us in that shoe. I maximize my loss and minimize my profit. Oluwatosin always saying, I would have loved you to explain, but I don't think we have that much time. Maximize your loss and minimize my profits. Oh, that's not good. Instead of you to minimize your loss and maximize profits, here you are maximizing your loss and minimizing. That means you close more trades or huge negative, but small profits. Yes, some people are in that shoe also. Okay. Pardon my ignorance. How far from the currency price of an instrument should I fix my entry price when placing the pending order? Wow. Now, that's Toyosi. Particular, uh, there's no particular straightforward answer to it. It depends on how the chart looks like. It depends on how the chart looks like. For instance, let's take a cue. Let me use this chart to answer a question. You want to place a pending order. There are different pending orders. This is a resistance level, right? And let's say this is your support level here. You're taking this and not this. Let's assume this is your support level here. Now you want to take a trade. The trade to place here it would be a sell stop. That means if there's a breakout price breaks here and you want to sell, that's going to be the trade, right? Good. Now, I just cannot come. It depends on where my stop loss is. If my support is here rather, then I can have my entry here for my sell stop, and I can as well have my TP maybe somewhere around here because of this other level here, right? But if my support level now is not here, if my support level is somewhere around here, right? Then my entry point cannot be where it was before. My entry point has to go below where my support level is, because for pending orders, we usually take cognizance of the market structure, which is your support level, your resistance level. So those are your pivot points. Okay. So that's why I said there's no straightforward answer. The best thing to do is to check for where your support level is. So if my support level is here, then I can't even just put it here. Then I should have it somewhere around here, because if I put it here, you see these weeks, it might come down, do the same thing I did here, then pull up. So I need to be safe. Okay. I need to give it some room. Right. Now, some people will say, okay, they might take profit. How far should it be? 20 pips, 30 pips. It depends on the next support level. So here at the next support level. So it will not be wise for me to be targeting this particular level all the way here, to be extending my take profit to this point. I should put it here. for me to be safe because this is my next key level that I can see. So how many pips is that going to be? Whatever pips the market gives me for it is what I take. So this will just give me barely 35 pips. All right. So if your target normally should be like 40, 50 pips, that means this market is not for you. This is not just okay. 35 pips, just leave that trade. Okay. So that's okay. What time frame? My network. I hope you can see it. What time frame you're using on your chart? I'm on 1 hour time frame. By default, 1 hour time frame is safe. As an intraday trader or a day trader within a day, 1 hour time frame is safe. Okay, please keep your questions coming. I would answer as much as I can because it's not just about analysis. I told you earlier that as much as a lot of us here or a lot of persons here understand to an extent the basic things about the markets, so many of you already understand support risk. A lot of you even go as far as using moving averages to trade. Some of you use Fibonacci to trade. Some of you use RSI to trade. Some people are so vast that they can even use Ichimoku trading strategy. All right. You even combine strategies to trade. Okay. Some people are even as modern as using or ICT trading strategy or SMC trading strategy, looking at your fair value gaps and all of those higher level terminologies. Right. Now, those are just terminology, they are names. The basic thing, after analyzing your price, you should place a trade. But there are still so many things that we do wrong. So let me just help us out a little bit here. And it's not always advisable to do instant trade. There are times where price is, it's not yet at a favorable point to take an instant trade. So pending orders too can help. If you are not patient enough to wait, then use pending order. But if you are patient enough to wait for price to get to that point that is safe to take a trade instantly, then yes. If you are patient enough to wait, then once it gets there, then you just use your instant execution. But if you're not patient, if you're expecting price to get to that particular level, just use a pending order, to allow it to move to that level. So I was saying something. Now, let me just put it this way. For you to take a trade, let me take the okay. Now let me start afresh. Please, I want everyone to be mute. All right. Now, for instance, you see where price is here. This is Euro USD. Do you know that if I want price to come down, if I'm expecting price to come down, or either I did my analysis, I said, okay, this is a support level, price broke support level, came back, price broke my support level, came back, is currently around that support region. And that means that there's a possibility that price can bounce up, right? There's a possibility that price can bounce up. Good. Now, if that is what I'm looking at, then I am trying to justify why price should go up. And obviously, I will find reasons. You will find reasons. You will. Have you ever been in a trade that after you took that trade, audio breaking, well, are we good now? Is my audio good now? Is my audio good? Okay. All right. Thank you so much. My audio is good now. All right. Good. Now, if I'm looking for a if I'm looking for a reason to buy this market, I will find there is a support here already. It's giving me a reason to buy, right? And I can see that the last candle is not really going bearish as the previous two candles. It's looking like they want to go bullish. Okay. I will definitely find reasons to want to buy. So have you ever been on a trade where after entering the trade, it started going bad? In fact, huge negative. You lost that trade. It was while it was in negative or after the trade has closed in negative, you started analyzing, why did I enter this trade? You now found out, oh, I shouldn't have entered that trade. If I had seen this thing, I wouldn't have entered that trade. Has it happened to you before? Okay. I just asked a question. All right. Thank you so much, Toss Popson. Now, I asked the question. You enter a trade. After you've entered the trade, it started going bad. It was while it was still going bad, or after you have closed the negative, you now started checking why. Why did I enter this trade? I wouldn't have, oh, this should have been, I shouldn't have bought, I should have sold, oh, if I've seen this thing. All right, good. Now, that is exactly what happens. It happens a lot. That means if you are looking for reasons to buy this market, you will find. And let me tell you, if I'm also looking for reasons to sell this market, I hope you know I will find. I will find. Why? Price has broken my support before. Yes, it can break it again. This support is not reliable again. This support level, it's not. If you look deeper, you will find reasons to not want to buy this market. You will find reasons to want to sell if you are on a sell. Or if you are already on a sell and price has been going up since, you were on a sell from here, and you are hoping that price will keep going down. All of a sudden, it started going up, started going up. You are a huge negative as we speak. I hope you know that your brain will be finding every possible reason that prices should go down. Like your brain will be justifying reasons why price should go back down and reduce your negative or possibly go back into profit, right? So there is always a natural bias that we bring into the markets. Now, how do I help myself to solve this natural bias? There are two things you can do. The first thing is risk management, and the second thing is reverse psychology. Risk management in the sense that, let's say you're a risk taker or you are willing to take that particular risk on that trade. Now, what do I do? So now I have found reason to buy, isn't it? Price is at around support level and it looks like it wants to pull up, right? So it means that if I am buying this market right at current market price, which is most likely what Euro US is going to do right now. If I'm buying this guy right now, then I should have my stop loss somewhere around here. Now, not here, but somewhere around here, because price has done this before. So I should give it a little bit of room. Are we together? Or some of you might say, okay, your stop loss is 15 pips, 20 pips, 25, or even 30 pips. That's okay. As long as it's below this next structure here. So one of the ways to save yourself is this. That means you are ready to lose whatever amount is going to be. Let's say from here, depending on your lot size, if my loss is going to be 5K here, it's going to be 50K, it's going to be 500K, you are ready to lose that trade if it goes against you. Now, I can assure you that if you repeat this same thing 10 times, it won't fail all the 10 times. There's a higher probability that 50-50 is going to work for you. So 5 times out of 10 is going to actually pull up. 5 times out of 10 is going to go down and give you negative. So you balance out. Now, what if I am right 7 times out of 10? Okay. Now, the truth is this. If you don't trade, you won't make profit. You can come back 5 hours later and find out that price actually went up. In fact, broke this other level and went further up. And you'll be like, whoa, why didn't I take that trade? So risk management. If you must take that trade, then have your stop loss. All right. That's number one. Number two. Mm, Number two is reverse psychology. So after I have done my analysis and it's telling me that, oh, okay, I've done my analysis, it's giving me a buy. Price should go up. I want to buy. Now, you should first of all ask yourself, okay, why would this market not buy? Like, are there reasons that can affect this market for it not to buy? Instead, it should go down. So ask yourself the opposite question. So if your analysis is giving you a buy, then ask yourself, why would this thing not buy? So instead of waiting to enter that trade and you find yourself in negative before trying to find out, oh, why am I in this negative? Oh, I shouldn't have bought, I should have sold, or I should have waited. Do it before you enter the trade. Trust me, it takes less than 2 to 5 minutes. It takes less than 2 to 5 minutes to do. So I've analyzed price. Okay, price should go up. Now, what are the things that can make this price not to go up? Okay, price has broken my support before. Then there's a slight chance it can break support. All right, fine. I can find out, okay, what is the trend right now? Is price trying to trend up or is it trying to trend down? Okay, so or price has been trending down, but for the past few days, it has been trying to pull up. This is my current trend. Okay, so it takes like just few minutes for you to do all of this proper analysis and you're already on your way. So ask yourself the hard question. What factors can come to play for this market not to go up? Or is there any fundamental around the corner? This is Euro USD. Is there any fundamental with Euro or is there any fundamental with USD that is going to come out, let's say, within the next 1 hour, within the next 2 hours? Because you might be on that trade, it's not yet in profit, you are still waiting for it, and the fundamental makes it. At that point, you are at the risk of the fundamental. If it goes your way, fine. If it doesn't, then it becomes a gamble at that point, right? Can you relate risk management to trading plan? Your trading plan should involve your risk management. There's a trading strategy and there's a trading plan. Your strategy can be you are using just support resistances or moving averages, whatever is your strategy. That thing that gives you that from okay, it's time to buy, it's time to sell. Now your plan is if I buy now, what contingencies do I have in place, right? Am I going to buy 2 to 1 risk to reward? What are the things that I'm going to see to give me that confirmation now to enter that trade? It's a plan your trade and trade your plan. If price doesn't get to this point, I am not entering this trade. It's a plan. It's not just a strategy again, right? Then the last one is risk management. Okay, what if price does not go my way? Wow, bad audio again. Are we good? Can you hear me well now? I just want to work on your psychology a bit. We'll soon enter the chat. We'll actually look at price, but let us just do this very key and important thing. Trust me, these few minutes you are spending with me here is going to save you a lot. You're welcome. It's going to save you a lot. All right? Thank you. Now, these things are simple. Forget about, now, I wouldn't just say forget about it. Sorry for my language. But it's not just about all of these focus languages or break of structure, fair value gaps, ICT SNCs, support resistances, moving average Fibonacci. So, yeah, it's good to learn them. But you see, over the years, people have made these things look so complicated. They are not complicated. They are not hard, right? So don't let anybody deceive you by just, mentioning grammars. I've been in that shoe before. When I wanted to learn, I went to see this particular man, his office. He just brought out the charts. In fact, he showed me one indicator. The thing looked like pipe. It was just going up and down, looked like a channel. I was like, so this, because I said, oh, I have some idea because I've been studying a bit before, but I just felt like I needed like a mentor. So I went to him. This guy just bamboozled me with so many languages that I've never heard before. And it was later, while I started I found out that all of those things are just jargons. All right. It's not, there are things that he made it look so complicated. They are not complicated. All right. CHF is making, yes, now there's a fundamental that just happened for CHF. Okay. So that is why. Now, leave out the fundamental. Let's focus on things. There are so many fundamentals. Let's focus on the market right now. I know you want to trade, but take a pause and just listen to these good tidings that will help you. I discovered that it's not as if people don't know how or some of what is strategy. Trading is beyond strategy. In fact, strategy is just not more than 10 to 20% of your whole trading. Psychology and risk management takes more, right? It takes more. Yeah, he bamboozled me. He did, he bamboozled me. Serious bamboozle. Like I was like, this thing is difficult to. But I took up the challenge actually. I took up the challenge. I went to study more, downloaded a lot of books, The New Trading for a Living, Alexander Elder. I got so many. In fact, I registered on Baby Pips, started downloading. I would download PDF and make sure I finish it within 3 days to 1 week. Like I don't sleep. I can start from 11 p.m. to like 5 p.m., 5 a.m., 5:30 a.m., sometimes even 6. I've done 3 days straight, 72 hours. Yes, I wasn't busy at all. So I went 72 hours straight. I'm eating, I'm there. I'm going to the restroom, I'm there. With my phone, I was in my phone. I was just studying because this man really, really put the fear of God in me with all of those bamboozling. So I took up the challenge because I know people make money from trade. But I know that look, trading just goes beyond, I just want to buy and sell. I need to understand the market. I'm here for the long term, all right? And I'm not just here to joke. Trading is a business and you must treat it as such. So if you learn about trading, it's a sustainable thing that you can be making huge profit from regularly, day in, day out, all right? Yes. All right, thank you so much. So now let's go into our charts. So the first one we'll also consider is the same Euro USD we're talking about. So what are the possible things that can happen in the markets? Now, the last thing I will say is there are two sets of persons. Some are, how do I put it now? Some react to what the market does. Some predict the market, rather, one. They predict the market by saying, oh, price will go up, then I just buy. That's all. But the other set of persons, they react to whatever the market is doing. That's react to whatever the market is doing. What do I mean? It means that those people who react, they have plan and contingency plan. All right, they have like plan A and plan B. That means whatever the market does is what is going to determine what me I will then do. I wait for the market to do its own, then I do mine. There's some people, they just feel the market will do like this. Let me just follow it. All right. I hope you understand the difference now. Some people predict and follow. Some other persons say, okay, I don't just want to predict you. As much as I want to predict, I'm only going to react to what you do. If you do A, then I do B. If you do B, then I do C. Okay. So these are the two different persons in the market. Some of us, please. What can affect the decision to buy or sell? Yeah, I mentioned some things. I said, for one, this my support level has been broken before. That means there's still even if it is 10 to 20% chance that this guy can also be broken again. If it happened before, then it can possibly happen again. So that can affect my price not to buy, instead to sell. That's one. Two, if there's a fundamental around right now, okay, so if I go back to my Forex factory, for instance, I don't have any fundamental for euro. Then the fundamental for USD that I have is by 1:30 p.m. So there's still enough time for me to take a trade, right? There's still enough time for me to take a trade. Let's see. The book name is The New Trading for a Living. Let me type it here. The New Trading for a Living. It's by Alexander Elder. That's it. The New Trading for a Living. Oh, sorry, I wrote BVY. All right. Sorry, that's a typo error. By Alexander Elder. Alexander Elder. So that's the book. You can get it. Wonderful book. That book helps me a lot. Mine is 320 something pages. But the first 20 to 25 pages are just stories. So you can skip that. But if you want to help your psychology, read it. They're just stories. Okay. So you can start from like page 25, and just move on. Now, we're talking about our Euro USD. So these are the reasons that this guy might not buy. Then the third reason is the strength of the two currencies. For this guy to buy, that means Euro has to be stronger than USD, which is not right now. USD is currently stronger. Euro is the base currency, while USD is the post currency. So Euro has to be stronger than USD for this guy to pull up. That is why it is struggling to pull up right now. Okay. But Euro has been down. USD. I noticed one thing. In the morning, Euro down. In the afternoon, euro will be up. In the morning, USD up. Later in the afternoon, it can be down, except there's a fundamental that pushes it back up again. All right. So this guy is struggling right here. So you might find, you see a lot of range that price did, to before it can pull up, right? So now this is euro USD. Now let me teach you a trick. Let me teach you a simple trick that I use. So once I open my charts, in few seconds, highest 1 minute, I know if I'm going to buy or if I'm going to sell, or if I'm just going to wait for the market to get to where I want before I take my trade, right? So this is the simple strategy I want you to follow. Whenever you open any chart whatsoever, there are three things you will do. The first thing is identified directional bias. That means where price is moving towards. I mentioned something at the beginning. Is either price is moving towards something or away from something. All right. So uh from this particular day, the price pulled up here, it continued the following day, right? It continued the following day. That price is not closing bearish for the day. Even though this one went down, later went up, closed slightly higher, it continued the following day. That means it's not going down. Right. Now, that means there's a higher possibility that price wants to, keep going up. My directional bias. And how do I identify it? It's on my 4-hour time frame. My 4-hour time frame gives me my directional bias. And also my daily time frame can also give me my directional bias. So on my 4 hours, what do I mean? Just all of these simple moves is my directional bias. When it was coming down like this, or all of these moves like this, downward movement. When it changed, upward movement. When it changed, downward movement. These are directional biases I'm showing you right now. So where price has been going for the last few days, these are my directional biases. This one lasted for a while. It even went as far as this point here, then down, up, down, up. So currently, what is price doing? Is it up or down? Currently, I'm asking the question now, is price doing up or down as we speak? Currently. The directional bias for Euro USD currently, is it up or down? Oluwatosin said down. Bamidele said up, said down, up. Okay, it's still confusing. All right, maybe I didn't explain it well. There's still a lot of ups and downs in responses. Okay, so I said, little this is down, this is up, this is down, up, down, up, down, up, down, and what? What am I seeing for the last few? This is a 4-hour time frame, not 1 hour. It's a higher time frame. So remember that one candle stands for 4 hours. There's a difference between my directional bias. I'm talking about the one I'm talking about is different from your trend. I'm not talking about trend. Trend. If you are looking out for trend now, it's a different thing entirely. Different thing. Then I need to go to even much more higher time frame. In fact, I usually use W1, that's 1 week, for my trend. Right. So with this one now, it's safe to say that this guy has been doing more downward movement for a long time. We can have something like this as my trend like that. But what I'm saying is, for a day trader, me and you, I want to trade today, enter, buy or sell, and close profit today. All right. I'm looking for where price is going in the shortest period of time. Let's say where price is going for the next few days or possibly next few weeks. Please let us all have ourselves. Where price is going for the next few days or few weeks. That's what I'm talking about. I'm not talking about the overall trend you have on the weekly or monthly time frame, or not even daily. I'm talking about the intermediate trend, right? So, like I said, for the last few days, price has been going up. This is my 1 hour time frame. I'm seeing this kind of move right now. I'm seeing this kind of move, right? That means there's a tendency price wants to go up, even though price has now broken this particular structure. Okay, so my directional movement, price has not yet closed to see, so it's still trying to pull up. So my directional movement for this guy is an upward movement. Upward movement. Price has closed bearish, more days this week, more days than it has closed, bullish more days than it has closed bearish. It has closed bullish, it closed higher than it opened. It opened here and it closed here, almost the same. It opened here and it closed here, almost the same, right? Now it opened here. Today is just active. You can be shocked that before the end of the day, price goes massively up, right? So that's what I'm trying to talk about, okay? So in that case, if you identify a directional bias, which is like one of the most important things you can do, the next thing to do is to look for what I call a liquidity, like where price gathered. Some people can call it support resistance, but in this case, it's liquidity. Now, what do I mean by liquidity? Do you see what happened here? This place here. You see this range, all of this range, where price was struggling to go up or down. It was just doing up, down, up, down, up, down, right? Good. That is a liquidity. It is like a pool of candles gathering together. So let me ask, it's just like this. Price is heading towards a particular direction, right? But as we all know, price cannot just keep going all the way. At some point, it will look like it wants to come down, then continue, look like it wants to come down, then continue, right? So times like that, price is just taking a breather, resting, trying to gain more energy, momentum. It's just like I'm traveling from Lagos to Abuja. I can't just make that journey at a go. I will stop to use the restroom. I can stop to eat. I can stop to rest. So those are the things that we are seeing here. So price is trying to go up, but it's trying to rest. Gather, gather, it's trying to rest. Straight up like this, then continue. But there are times where after looking like gather energy, it pulls down a little, then go up. Just like you want to jump, you must first go down, right? The more you go down, the higher you can jump. So that is exactly what price also does. So whenever I see those things, it's an indicator. So look at this one also. So it was gathering here again, looking for momentum. It just tapped a little bit, continue, all right? It has been gathering, gathering. Now it has come down. It means that if price is going to go up, it will go massively, like really massively. Now, where is it possible for price to go up? That is the key question, and that's the final thing we are going to do now. So I mark out my previous liquidity points. So let me shade them out for you. So from yesterday, I had this cluster here, this one. So I pull it, I extend it to today, to the end of today. That's one, right? Then I look for where do I have this kind of cluster again. I have this kind of cluster all the way here, previous days. That's from Monday. On Monday, I had it again. I extend it here. You see. Now, these are two major points for price to pull up. Notice that I didn't drag it all the way down. No, I did not. I put it this way. I'm only interested in these short candles. They are not long. They are short candles. And you will see up, down, up, down, up, down. They form a range. Up, down, up, down, up, down, something like this, right? Good. So these are my pivot points that I would like to take trade. Let me apologize again for the voice breaking. I don't know. Sometimes it shows me that my network is unstable. It shows me. I don't want to tell you my location. If I tell you where I am right now, you would understand why it's like that. Okay. Understand why. But I hope we are good right now. I hope you can really hear me. I hope you can really hear me. Okay. Okay. All right. Thank you so much. Thank you. Thank you. So I'll just give you little tips and tricks here and there, then I allow you to apply them. Okay. Um, okay, let me continue. Thank you. Now, what am I trying to say? The reason why this guy is pulling down, which is one of the reasons I mentioned why price might not really go up, is you can see that euro is dropping strength while USD is picking up strength. So I said for this guy to go up, the narrative has to change. Euro has to become strong, all right, for price to actually pull up. So until it does that, two things can happen. It's either price just keep ranging here, waiting for euro to gain strength to go up, or price keeps going down to locate a liquidity point. Now, it is going below this first liquidity point here. I'm waiting for it at the next liquidity point. It means that if price comes all the way down here, yeah, then I'm expecting it to now pull up. I'm expecting it to pull up. I'm expecting it to pull up. It can pull up to this point, or it can pull up and even close bullish. Remember, price should close more bullish than bearish. That means if our directional bias is up, then in a week, price should close higher than it opened more, like 3 times or 4 times. And if you are lucky, you can have 5 times in a week, 5 trading days, price closes higher. So I'm expecting price to close higher for today. So whatever is going down now is temporary. So I'm just looking for where price can get to. So this guy is looking for momentum. He's not finding enough momentum to keep going up from here. So price is trying to go back to this source and get enough because there are more liquidity around here to go up. So until price gets here, I am not buying. So you can have your pending orders around that level, in case you don't have the patience to wait for it. So that's what I explained. It is not every time you use an instant execution. And times to use your pending order if you're expecting price to get to a particular level. So some persons can have their sell stop, around this level, bringing it all the way here. So, but this is what I'm expecting for Euro USD. Now, remember what can happen. This guy can get here and fail. Maybe your village people enters the chart. So the best thing to do for yourself is to have your stop loss. Now I'm going to have my stop loss here. Reason is because the last time price got to this liquidity, see how much it tapped into it. So I will have my stop loss somewhere around here. Then I can buy around this level, something like this. So this, because I'm expecting price to close high, close bullish. Last few days now, you can see price is having an upward momentum. Okay. So this is for Euro USD. The first thing is identify your directional bias. Okay, thank you very much for Sunday. Yes, the strategy holds. If the directional bias is downward, then your liquidity should form your resistance level for you to take a trade. Probably we'll find one now. What's that question again? What's the instrument used to indicate the percentage trend? Okay, no, this is, I had to cross 7 rivers and climb 7 mountains to get this. This is currency trend power. Just ask your account managers, they should be able to get it across to you. But it works only for those using laptops. For those using their mobile phones, let me see. You can use this site, livechat.co.uk. I'm going to post the link for you now in the chat. Let me open it. For those with phone, you can't have access to the currency strength power because it only works with laptop. So you can see the strength of currencies like this. You can see that USD is way stronger than Euro right now. Okay, so let me this link. Let me drop it for you. So you can use this link to have access to strength of currencies if you don't have a laptop to get this one. Okay, to get this one. All right. So this is what I'm expecting for Euro USD. And as much as I'm expecting that, that means if you can follow the way here, I take a buy. If you don't follow the way here, I'm not in this market. Even as much as I take a buy, anything can still happen. So I have my stop loss around here because even there's a 1% chance that price breaks my liquidity point. Then I have my other liquidity points close by. It will just keep tumbling all the way downward, right? So can we use baby pips too? Sure, you can use baby pips. All right. Now let's apply this same analysis to another chart. Simple steps. If you get used to it in less than a minute, 2 minutes tops, you already know what you're going to do on any single chart. Right? 2 minutes tops, you already know what you're going to do. Now, I want to introduce some of you to, let's say, GBP NZD. That guy does one funny thing. Or is it GBP NZD, GBP NZD, GBP NZD? Okay, pending when I find GBP NZD, let's quickly go to oil. If I drop it, it's not just about dropping it, about installing it. You might not be able to install it. That's why I said contact your account managers. They will walk you through the installation. We don't have enough time for me to do that. I think yes, you can also use Femi Adewi. You can also use that to get the strand of currency. Third strategy. I hope, okay, good. This is GBP NZD. GBP NZD. So let me just drop this one for you here. This is just, by the way, for those who are interested. Now, nothing about this guy. If I want to do my directional bias, which is the first thing I said you do, right? So let's do step by step. First thing is your directional bias. I use my H4. Now, instead of finding a definite direction on your H4 or your, you that applies between a lot of cluster, a lot of cluster. What do I mean? GBP NZD does what we call range. It ranges a lot. Like it does massive ranging. This is a resistance level for this guy. And this is a, after having the resistance level, then this is a support level. Okay, this used to be the support level. A laptop. Wow, sorry.
Warning. Circle. Suspension. I need circle.
Let's have our mics mute, please. Okay, let me have this. Okay, this used to be our support level until it became much more massive. Now, this guy does a lot. If I zoom out further, you will notice that this guy will range, and break out. Range, then break out. Right? If it will do a lot of range, break out. That means trend for a while. Range, trend for a while. Range, trend for a while. So I'm trying to capture those range because with that range, you can make price moves out of that level. So price does up, down, up, down, up, down. So up, down, up, down, up, down, up, down, So right now, where do you think price is heading towards? Down or up? Just take a peek. Where do you think price is heading towards? Meanwhile, I'm on a 4-hour time frame. I use 4-hour time frame to do this. Where do you think it's heading towards? Up or down? Okay. One said up. Okay, who else? Who else? Please, I need your responses quickly. Down. Remember the range. Up, down, up, down, up, down, up, down. So where is price going to now? Okay, it's going down? No, price is going up. We don't have enough time to start again. Just tell price is going up. Price is heading up, like heading up. Get up again, start the journey down. Now, it will do this for a while before it will then trend. Especially when there's one huge fundamental for either GBP or NZD, then to change direction and go for a while, then stay trend. So yes, price is currently going up. It means that I'm looking for opportunities to do what? To buy. Now, I don't just take my buy for 4 hours, then I come down to my lower time frame. It has gotten to the previous support, but it has been struggling to really go to the resistance. It has not really gotten to resistance. So until it gets there before it starts working its way all the way back down again. So I go to my lower time frame, my 1 hour, for instance. I'm on my 1 hour right now. So on my 1 hour, this is how it looks like. So you can see that there's still enough space for price to get up here. All right, there's still enough space for price to get up. Now, I'm looking for liquidity point. That's the final thing. The first thing is directional bias. Second one is go back to your lower time frame and look for your liquidity points. I can find it on my H1. You can even do 30 minutes. Some people are using 15 minutes time frame to take their trade. Liquidity points that form support for me, right? Now, in the case of GBP NZD, I might not have too much cluster like that. Okay, I have one here, but I'm looking for the one that is down. So I just have spot one small liquidity point all the way here. all the way here. Just one small one. You know, this range, I capture it. Then I put it forward. That means if price mistakenly comes all the way back down to this level, then this is where it's going to have enough momentum that will sustain it to pull back up again and can even possibly break it. You know, that's if it doesn't even get to that point. Now, two things. I can take an instant trade here because if it comes down here, I know that it is most likely still pull up. So I can take an instant trade, or I wait for it to tap into my liquidity, then enter my, buy trade, right? Now, this is very, very simple, very easy. I see, where is that US 100? Where is this guy? My goal here today is not just to come and tell you GBP USD, buy, sell, AUD USD, this one, no. Is to actually show you some things that you've been doing wrong so you can get them right. So you wouldn't need any. The goal of this analysis is not just to come and dish out, buy, sell every single time. It's for you to be able to place those trades by yourself. Right? Place those trades by yourself. USD CHF. Wow. Let me guess. You are in a huge negative on this guy. That means it came out bad for CHF. Let me refresh this guy. Came out bad for CHF. What's wrong? Guess my network. Okay, like I said, it came out in red. Remember what I told you. If it comes out in red, which is bad, the currency will lose strength. Now, CHF came out bad and USD is already strong. No, the trend is usually opposite to directional bias. No, it's not. No, that's not exactly what I'm saying. Okay, so are you on a negative on this trade? Price, the directional bias for this guy is actually down. But what is affecting it now is fundamental, which is beyond our control. You don't predict fundamental. It can come out good or bad. You are at the mercy of the fundamentals. So that's why people use pending orders a lot to trade fundamentals, right? So as much as our directional so recovery. And the good news is that I think somewhere around here, we have a support level. Somewhere around here, we have a support level. So hopefully this support, and if I apply my currency power, I'll see that the USD is very strong. That CHF, weak. The news came out bad, became very weak right now. So we are at the mercy of how long the fundamental will last in the market. So two things, if you break this resistance right here, most likely Yes. Yeah. Oh, I'm sorry, I was mute. Well, so the YouTube link is there, so you can watch this particular video, so you can get the full knowledge and everything I've said. Unfortunately, the network and all did not allow us to finish our session, but please do want to rewatch this session.